All right. Thank you for tuning in to another edition of the Pre-Market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we place in your hand each and every trading day. All right. So today is going to be quick as I can make it because we have something to discuss. Now, I do know that a lot of things are happening in the mainstream media. You're hearing a lot of this, you're hearing a lot of that, and it's probably making you wonder what in the world is going on. Well, we do have a lot going on. We got earnings season in the stock market, we got elections coming up in the week. It's just a lot of things going on right now, and people are trying to wrap their heads around it. And as you know, the market does not like uncertainty. And that is what we are facing is uncertainty. Okay. However, you need to think about something else. What happened yesterday? What happened on the Black Monday that we just had? Now, in comparison to previous Black Mondays, the last few weeks have been nothing but Black Mondays. When I say Black Monday, what I mean is a Monday where the market is down sharply. Okay? That's it. A market where the market is down sharply. Doesn't mean a crash, just means the market has pulled back. And that's where we were yesterday. And that's where we are kind of today. So we have to look into this and take a look deeper as to what is going on. So I'll nip it in the bud for you. But first, we got to finish looking at these overnight markets because guess what? The Dow is up 1 point at 27,582. The NASDAQ 100 is up 38 points at 11,531. Even the S&P 500 is up 4.25 points at 33.97 and 3/4. And we got the Russell My Hustle up 0.6 at 1602.7. The Bitcoin Mighty Futures Composite Index is up 400 at 13,445. Almost 1,000 points higher than our initial target of 12.5. Nat gas right now is off 2 pennies at $2.99. Crude oil futures are up 1/4 at 25 cents a barrel at $38.80 a barrel. Long bond is up 11.30 seconds at 173 and 30 seconds. Gold futures are up 40 cents at $1,906.10. And silver is off 2 cents at $24.40 an ounce. The euro is up about 17 pips at 118.43. Pound sterling up 28 at 130.50. Aussie is up 6 at 71.33. US dollar index is down 16 pips at 92.88. Soybeans off 1.25 at 10.86 half. Corn up 1.25 at 4.19 even, and wheat up 3 at 6.23 even. All right, so what do I want you to know? What do you need to know? Yesterday's market activity, you will hear the talking head say, well, it's fears about the virus, fears of the virus. It's spreading, it's worldwide, it's spiking here and spiking there, and everybody is shook. We're looking at shook ones, right? Nah, not so fast. That is not the real reason why the market was pulling back and selling off. Part of it was that, but a small part, nonetheless. Another part was the terrible earnings, all right? But the biggest part that you won't hear the talking heads on TV address is that the market was actually, it took a day to entertain what a Biden presidency would mean to the U.S. That's right, ladies and gentlemen, the market factored in a Biden victory yesterday. So the market is telling you, it's letting you know, okay, that if Biden wins, the market is going to sell off and sell off sharply, fast and furious, and continue to fall for a while. A Biden presidency is bad for the economy. It is bad for the stock market. It is bad for investors. All right. A Trump victory is great for the stock market, and the stock market will rally just like it did on the night of his victory. Do you guys recall that amazing trading activity? If you missed it and didn't see it, it is still up on my YouTube channel. Just go to 2016 and you will see the presidency series of videos I did starting the night of the election and going on for a couple of days thereafter. So you will find yourself very entertained because I went live, showed you the market activity, and it was bananas, unlike anything we've ever seen before. So I have two words for you. Algo shift. I think you know what that means, but we'll get more into that in a moment. But first, I want to remind you, just because the market is selling off does not mean you should be short. Just because the market is rallying does not mean you should be long. All right? I want you to burn that into your skull. Just because the market is rallying, prices are going up, does not mean you should be buying. And just because prices are falling does not mean you should be selling. You need to learn that. You see, the PulseWave reports have been updated to reflect that. So I know those of you who have been heavy watching and trading in and out of the tech sector, on one hand, you may have been a little surprised yesterday because there was no crash alert waiting for you. And in addition to that, there was no sell trigger for you. So you were not involved in yesterday's sell-off for a good reason. Let's explain. You see, when you are in a bull market, there are times where the market will sell off and pull back to support levels, giving you another opportunity to buy low. You know, buy low, sell high. All right. That is the age-old mantra, isn't it? Buy low, sell high. But sometimes you have to buy high and sell higher. Well, that's why the reports were updated with the zero line to let you know where the momentum is, but also let you know where the market bias is so that you don't get burned. Have you ever heard of a bear trap or bull trap? Those are very real, my friend, very real. And that's why I designed the system to explain to you what is happening. Take, for instance, yesterday's report with the NASDAQ 100. According to the intraday price inflection points, if you looked at that one, you would have noticed that there was no sell signal there for you because it wasn't for you to be shorting that market. If you take a look at today's report, you will find it very interesting. Look at where the market is now and look at yesterday's intraday price inflection point. You see, when you see your weekly intraday price inflection points, that is your red alert. So that regardless if you have a signal in the market or not, it alerts you to market activity. It's saying if this happens, regardless of trade signal, you need to be aware of it. So if anything, if you were long the market coming into yesterday, you would have tightened your stop and you would have got stopped out with your profit. All right. You would have had some profit. So that means you would have been taking profit on long positions on a day where the market was down. So technically you could say I made money when the market was falling because you took your profit off the table. Now coming into this morning, You look and you say, well, I noticed that this morning, it's telling me to chill on the long side of the market. Yeah, it is. It's telling you to relax. Because guess what? There are individuals who bought yesterday and are looking quite foolish this morning because they tried to catch the falling knife. This is what happens when you try to outthink the system. You can't do it. You're going to hurt yourself. Stop it. That's why you have a system. If you're not going to use it, you might as well not even have a system in the first place, right? So this is what we do, and this is how we do it, ladies and gentlemen, each and every day. It's designed not just to keep you out of harm's way, but to put you in a position that you can make some money. And it alerts you not just with rally and crash alerts, but with intraday price inflection points to boot. So that if there is no rally alert or crash alert, the intraday price inflection point will alert you to the activity that you need to be aware of. Get it? Got it? Good. Let's keep it pushing. So once again, coming into everything yesterday, you were aware of what was going to transpire so that you could do what you needed to do. And that's just what we do. That's just how we do it, people. That's how we get it. We do this professionally every day. It's not a game. It's not a joke. And we're not playing around. We're not kidding. All right, we do this. We does this. So you need to be aware of a few things. Number one is algo shift. Yes, another algo shift is coming. Did you doubt it that it was coming? I mean, really? You know we have an election coming up. So of course there's going to be something about that. Of course you're gonna see that. You're gonna see that reflected in the price action. All right, this is a very important election. This particular election is so important, even more important than 2016, because this election could set the future course of the United States for decades to come. So that's why you're seeing the rhetoric like you've never seen it before, flying all over the place, all types of mudslinging. And it's going to keep on going up into the day of the election. All right, because those in power tend to want to stay and remain in power. Those that are seeking power are willing at most times to do whatever it takes. They're willing to do anything and everything to attain said power. All right. So where do we go from here? Algo shift. Major algo shift as we move forward to the election. What does that mean for you, and how do you position yourself to make a fistful of dollars? Well, first of all, you need to have the PulseWave price trigger reports, because without it, I don't know how in the world you would tend to go about doing that. Second of all, here's what's going to happen. The market is designed to do two things. The first thing it's designed to do is, by its mechanisms, it was designed a certain way. And that certain way that it was designed with a built-in bullish mechanism, which means that there is a general bullish bias already given into the market, period. All right, that's why they created certain markets, and certain stocks come on the market, and certain commodity futures contracts and forex currency pairs, because they're designed to go up. All right, they ebb and flow, but they have a built-in bullish mechanism, especially the stock market. All right, because you expect, when you invest money, you expect a return on your investment. Why else would you invest, right? So there is a bullish mechanism built into the stock market. If you take today's stock market, or even yesterday's stock market, been a down day, and trace it all the way back to 1929 and look at a real big macro chart, you'll see an upward trajectory, an upward bias. Regardless of the sharp declines, pullbacks, crashes, smashes, you will see a upward bias in the market. How do we know this? Even without looking at a chart. Today's Dow is higher than the Dow of 1929 and the Dow of 1930 and 31 and 32. It is higher. Okay. It has a bullish trajectory baked into it, into the mechanism of the stock market. That's why the long only strategies worked for so long back in the day. The reason why they no longer work now is because companies do go bankrupt, companies do go out of business, but there is more gyration, there is more volatility now in the near term and the short term. And markets can stay depressed for prolonged periods of time. And unfortunately, for some people that were entering into retirement, their investments was, taking a nosedive to where it was at its highs, and it has taken some time for some of those investments to recover, and a majority of them have not. All right, so that's the dilemma that you face. That's why I always tell you every day that this is not your granddaddy's or your great granddaddy's market. All right, it's a totally different animal now. Okay, some of the aspects of it remain the same, but for the most part, the way that it moves, and the way that the price action moves, it's nothing that you can compare it to in the past. It's totally different. So here's what I am seeing. All right, as I'm taking a look at the algos, it's looking like the market is doing what it always does. There are aspects that have not changed, people. What does the market like to do ahead of a big report or a major event or announcement? It always likes to move in the direction of the announcement. Okay. So the market is selling off, it's pulling back ahead of the election. All right. Before you blow up a balloon, it has to be flat first, has to be flattened first, right? So that's what's happening. All right. They depress a market that they intend to inflate and pop a market that they intend to deflate. That's what you do. All right. That's what you do. That's what they do. So you're going to see this volatility up until the election, but make no mistake, anyone caught short after the election is going to be punished severely. If Trump wins, the market, no matter how depressed, no matter how much it has fallen, will run in reverse so sharply, it will scare you. You'll say, I've never seen anything like this. Well, it happened before. You did see something like this. On the night of 2016, the night of the election, the Dow Jones fell 1,200 points that night. The futures collapsed, along with many other financial products. We're not going to talk about how the British pound fell like 3,000 or 4,000 points that night. And since then, has recovered. So has that Dow. So that's what happens. So sometimes it's better for some people, especially those that can't be glued to the screen. It's better for you to step aside and let the landslide pass. And then once the landslide passes, you can come in and you can get long a lot of different things and just make a killing. Some people are greedy and think, oh no, I want to catch the bottom, the top. You're not always going to be able to do that. You're not always going to be able to do that. For most people, you're going to basically be a long only person because it's going to be harder for you because you don't have the wherewithal to sit in front of your computer screen. All right. So there's nothing wrong with that. As a matter of fact, if you take a comparison, look at all of the crashes, for lack of a better word, that the market has had since 1929. You tell me who made the most money. The person who was able to get short at the very top of the market before it collapsed, or the individual who brought at the bottom of the collapse and held until now? Did the short only people, are they ahead right now, or are the long only people ahead more? Exactly. The long only people are ahead more because those pullbacks in the market, those declines, those crashes are temporary and they're limited by the very definition of the thing. There's always more money on the long side than the short side. Always remember that, because the lowest something can go is zero. A stock can go to zero. A $64 stock can go to zero. We know that, right? So you need to look at it that way. Yeah, it's fun short term where you can, capture a decline, but the big money, the real money, is always made on the long side of the market. Always remember that. So don't kick yourself if you missed a short. You'll be able to catch the long. And let me give you a long-term trajectory onto what will happen here. Biden presidency, you haven't seen the lows yet. Trump victory, you haven't seen the highs yet. It's just that simple. All right. Now I'm gonna give you something else too to watch for. And this is gonna sound a little weird to you. All right. But you got to prepare yourself. A Trump victory in the short term may depress your crypto market and your precious metal market. All right. So you got to be prepared for that. Because again, flight to quality is not necessary when your stock market is on fire. All right. People don't feel the need to have to take any kind of protective options, for lack of a better way to say that. All right. So it's not necessarily a bad thing, but when assets are no longer depressed, there's no reason to flee to safety. So you only flee to safety like bonds and precious metals and cryptos because you're like, oh man, the dollar's in trouble, the stock market's in trouble, and I need to do something. So in the short term, that will happen. But all you need is a good story for, about inflation, and that'll pick your precious metals and your bonds and your crypto market right back up again. So just keep that in mind, that there are some short-term risks that are in play as a result of this. And really, at the end of the day, you really can't avoid it. So it's better just to be aware of it so that you can make the right arrangements and do what you have to do. All right. So once again, in the short term, a Trump victory may be bearish for your precious metals and your cryptos. A Biden victory, though, in the short term would be bullish for your cryptos and your precious metals. All right. Just understand that. So that's kind of the flip-flop the algos are showing us as of right now that you need to be mindful of and prepared for. Okay. There's just a lot of, like I said, the markets hate uncertainty, but you still have to account for it. You still have to prepare for uncertainty. All right. And like I said, there's just nothing you can do about it. You have to prepare for it. You have to prepare for it. Okay. So I wanted to give you these market outlooks and insights as we move forward, so you'll know precisely what to look for, because it is required of you. You're gonna need to be on your game, because what is coming is going to be lightning quick. Now I am preparing and thinking about, depending on what I see on election night, I might have to go live again like I did in 2016 to help you guys navigate these turbulent times. So I am preparing for that as we speak. And I'm looking at a few things here too. I just want to check a couple of things. Yeah, hold on one second. Yeah, so I'm thinking about doing that. I might have to do that. It just depends on what pops off. There's also another risk. The other risk is that we have what is called a delayed reaction. Okay, delayed reaction in the market. Now, that is a possibility because we've already been propagandized to death and told to expect some contention, regardless of which side wins on the general election, the night of the election. We've already been told that we need to prepare for contention, which means that for the most part, no one's going to back down. We've also been prepared and told in no uncertain terms that if no victor is declared on the night of the election, that we have to do something else, which means that if it's uncertain and we don't have a victor, like the whole night, I expect the market is to be extremely volatile. There's, oh, it looks like Biden's winning or he's taking this. Okay, now the market's doing whatever. Oh, it's looking like Trump is coming back. He just won this state and that state. Oh, now the market's going to. So you expect the up and down volatility to be crazy. But at the end of the day, if they say, okay, we don't have a victor, or if one state has not reported, let's say California still ain't reported until the wee hours of the morning, or they'll wait until after the market opens at 9:30 or whatever. Until we know for certain who has won the general the night of the election, the market is going to probably, you got to prepare for this. It may be flat. If we get contention right off the bat and it's looking like a fiasco the night of the election, I'm expecting the markets to do absolutely nothing. You would think, is the market open or is the market closed? No one's stupid enough to step in front of the uncertain. So everyone's just chilling and waiting. So prepare for that too. And prepare for the market to do nothing as long as the world is uncertain. Now, hands can be forced. Okay. The market can, this is what the market likes to do. The market likes to punish uncertainty. And so it'll sell off. It'll just start crashing. And you'll think that, there's a 9/11 happening somewhere, and it's not. It's the market punishing Capitol Hill for uncertainty. All right. So you need to understand that. If we do not have a victor and it's looking like a fiasco, and that a victor will not be declared for months because we got to go to the Supreme Court and all this other stuff, then expect the market to most likely fall to pieces because of that. And that's only on the uncertainty. So what am I saying? If Biden wins and it's clear and there's not a fiasco and he wins, market falls to pieces. If there is uncertainty and no victor is declared and it's contentious and it's a circus, market collapses. If Donald Trump wins and it's clear and it's not contentious, market explosion like you've never seen in your life. I expect the Dow to probably rally 1,000 points that night as the Republicans and the 1%, the elite, celebrate a victory and they're able to exhale and say, "Whoa, that was close. I thought we were going to be paying taxes at 110% for all capital gains." So that's what we're looking at. That's where we're going. All right. That's where we're going. Okay. So you need to be prepared. You need to think about this, ladies and gentlemen, as we move into that setting. Okay. We're moving into that setting. So I just wanted to prepare you for what is to come, because you need to be aware of it. Okay. You gotta be aware of it. All right. Forewarned is forearmed, right? So there you go. Now you know. And knowing is half the battle. G.I. Joe, right? All right. So what else is there to talk about? Nothing really. It's just so much going. So there's so much going on. There's so much happening. Um, but in my humble opinion, it's not even really worth your time and effort. You know, that's the thing about wasting time. You can't get that time back. You know, you just can't. You ever watched a whack movie that you thought was going to be good, and then you leave disappointed, like, man, I can't get that time back. That time is gone. I lost that time. Shoot, shucks, rats. Well, that's how it is sometimes. There's so much news. What I do is I just turn it off, man. I focus on what I need to focus on, especially any news piece that's going to be market related and affect markets. That's at the end of the day what I'm really looking at. I'm not looking at anything else because, to be honest with you, I don't care. Yeah, I really don't care. I do not care, and you can't either because then it'll frustrate you, and then you'll be tossed to and fro. Every time there's breaking news somewhere, you'll be like, "Oh my goodness! Oh my goodness!" You don't want to be like that. You don't need to be in front of the news screen like that because you got to remember something. What you're seeing and what you're hearing is propaganda. It's designed to freak you out. Okay. They want to freak you out. They want you to be scared. They want you to be shook. All right. Don't give them that satisfaction, people. Just don't do it. Don't give them that satisfaction. Do not give them that satisfaction. They want the American people to be confused so that then it makes it easier for them to tell you what to think. You don't need nobody telling you what to think and how to think it. You have a brain. You know how to use it. So that's why you don't see me always focusing on stuff, negative stuff and news. Because let's be honest, I could be on here for 5 hours straight breaking down news, but you can't get that time back. That time is gone. It's wasted on nothing. When there's something to talk about, I talk about it. If there's nothing to talk about, then I'm not going to talk about it, especially anything that's ridiculous. And right now, there's a lot of ridiculousness going on. So I try to avoid, that as much as possible. But there are some things you should hear and think about this morning. So let me roll those off to you right quick. Okay. So, I believe that when you give your opinion should be based on some facts and or truth. If there's truth in a particular situation, sometimes the truth is not always known or it's hidden. So then you go with whatever facts that you can find, or shall I say, evidence admissible in a court of law. That's the approach that I like to take. I look at the evidence and I let the evidence show me what's what. And wherever it leads me, that's where I'm going. Okay. Now, this morning, U.S. home prices have been reported to be accelerating at their fastest pace in 2 years, according to the Case-Shiller Index, reported a 5.18% year-over-year gain, which is the fastest pace of acceleration since August of 2018. Now, just hearing that naked number, that fact, right? What they're reporting to you is a fact. That their numbers are fact as a fact. It's not massaged. All right. It's not a conspiracy. Those are factual reporting, factual numbers, right? But the fact is not always the truth. See, just taking that at face value, but like, oh, see, housing market's doing great. You don't know what you're talking about. But let's see what it did not say. First of all, it gave you the raw numbers of what's going on in the U.S. home prices, right? But let's look at what it's not saying. It's not saying who's doing the buying. The average American is not the one that's pushing that figure up. The buying is being done by corporations, and you know what that means. Private parties, and not individuals, but entities are the ones doing the buying. But they're keeping that from you as well. Okay. Other than that, U.S. durable goods orders beat in September but remain lower year over year. Of course, these are the unintended consequences of lockdowns. All right. So you need to be prepared of that too. And then here's another weird one. Caterpillar, which is supposed to be like Dr. Copper. They say Caterpillar and Dr. Copper have doctorate degrees in economics. If copper prices are rising, then that means the global economy is doing good. If Caterpillar stock is strong, then that means that the U.S. economy is good. Well, Caterpillar slides on lack of guidance despite revenue and earnings per share beats. So, as I just said, Caterpillar is typically seen as a bellwether for the economy. So, analysts looking for hints as to how the recovery from the pandemic is progressing, they were likely disappointed. See what I said? There's facts, and then there's facts that are supported by truth. If you just looked at the U.S. home price increase, you would think, ooh, the economy underneath is still strong. No, it's not. Dr. Copper and Caterpillar stock disagree with you. And their record, their long-standing record, is pretty much spot on, ladies and gentlemen. I can tell you that. You ain't got to like it, but you do have to acknowledge it. All right, so this is where we are, ladies and gentlemen. All right, so the next thing that we need to talk about is the contention surrounding the election. Okay. All I gotta tell you is, and I know I'm sounding like a broken record, but your country, the United States, is in a lot of trouble. Okay. And I don't know about you, but I look for signs and symbols, and I follow not just money flows in and out of the markets, but I look at other things too surrounding that. I don't know about you, but have you noticed an uptick in, I don't even know how to say this, so let me just try to get my thoughts out as clearly as possible. There's almost been like a rise in the US. Like, how do I say this? Oh man, it's weird. It's weird, but just hear me out and bear with me. I ain't gonna keep you long. I have noticed a rise in, I don't want to say European, but more so British culture and ideas and concepts, European stuff flowing into the United States. Let me explain what I mean. There have been tremendous advertisements and things for British television, right? And I've noticed that you've seen more, British speaking news commentators, and there's been a rise in British actors and actresses. There has even been a rise in British rap. Okay. This wasn't like that 10 years ago. This is something now. Now, all things being considered, there's some aspects of the culture of that culture that are pretty interesting. But I've noticed that almost as if America is being co-opted by its mother country, which is Great Britain, right? I don't know about you, but I have seen that. I've noticed it everywhere. All right. Ladies and gentlemen, I'm trying to put these thoughts together for you here. It's almost like Great Britain is co-opting the United States and taking it back per se, taking it under its wing. Because of what I told you yesterday, because America's on its way out. So it's like the crown is having to step in and take over, and slowly they're trying to get us, they're easing us back into the British culture, because America doesn't have a culture. All right, America was this big test, this experiment that never before took place anywhere in history. And it's becoming more British. America's becoming more European. Have you noticed that? So we've had a rise in the BBC being watched over here in the States. There's been a rise in British telly being watched here in the States. I'm one of them. On Amazon Prime, they have, I told you, the best crime dramas. And in British rap, accent and all. British actors and actresses, you know. I just noticed that influx of British culture, the invasion of British culture here in the States. I'm just saying, which is necessary, because if the patient is sick, don't you need to send in some nurses? You know what I mean? So it's like they're slowly bringing us back into the fold, so to speak. Because what else is going to happen? I mean, once the U.S. government has collapsed, you can't have no government, and there's too much financial interest over here. All right? You guys don't want to hear this, but I got to tell you, China basically has, you can say they pretty much own over here. But let's not forget, Britain has a lot of interest over here too, and so does Russia. Did y'all know that? And so does the Middle East. Pretty much the whole world has a lot of money invested over here in the United States. So they can all claim a piece. All right. Let's not forget, before the United States became the United States, it was like every other continent. Basically, each individual piece of land, if you want to call it that, or state, if you will, was its own country. Just like Africa. Africa is not a country, it's a continent made up of hundreds of countries. Same thing with Europe. Europe is not one country. Europe is a continent made up of several countries. Well, that's how the United States used to be. And if you think about it, before, the United States became the United States, other countries had claim to other states. And we had to basically buy those states from those countries. So that should tell you something. To tell you a lot. So just something for you just to think about, just to think as the United States is falling apart. I want you to just think about these things and what does this really mean? Now, don't get me wrong. When the United States falls, it is going to lead to a global depression. You think the lockdowns created the depression? You ain't seen the depression I'm talking about yet. But it is coming. It is coming. Debt is not a good thing. The debtor is always slave to the lender. Do not ever forget it. The borrower is always slave to the lender. That is a principle that is never changed and is never going to change. All right. So just something for you guys to chew on this morning. All right. And with that being said, you know what it is, man. PulseWaveTrading.com. Come break bread with us. Learn how to do this. Okay. And by the way, when I'm right, I'm right. To this day, there's still been no Brexit. Still no Brexit. Where is it? And remember, the bookies that night on the election told you it was a guaranteed thing. It was a sure thing. It's like they're lying to you again. Can you really believe these pollsters? They're supposed to be professionals. They're supposed to know this and know that. How could they get everything so wrong? And these guys make big bucks to do what they're doing. And they are proven time and time again, they do not know what they are doing. So sad. So sad. PulseWaveTrading.com. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.